Hello guys, welcome to the Trading Parrot. It's a very sunny Sunday and I'm looking forward to go out and spend some time. I live in UK, so a little bit of sunshine. It's gold. We barely have a few days with sun. Out of 3 months, we are expecting 50 days of rain. I'm not surprised to see so little price action over this weekend since most of the North Hemisphere, it's showing a little bit better weather during this weekend. So people are taking advantage of that. Not everything is influenced just by TA. Sometimes people take a break during the summer, which is not something bad. And as you can see in the monthly returns, we just closed the month of May with 11% up. Out of the 14% down that we did in April, we have reverted partially the damage made during April. If we focus on the monthly chart, you can see that this surpassed the 50% Fibonacci. So more than 50% of the damage has been mitigated, and that is perceived by traders as something positive. We are above the highest close, but we are below the highest high from the previous bull market. So we are still in that transition in making this decision whether we are going to test the next lows or if we are going to break out straight away and start going into bananas territory. One of the things that are calling my attention is that after we did this high of 51% interest over time early March, we did a lower low somewhere in April, and since then we've been doing lower lows and lower highs. And this is, ladies and gentlemen, the lowest interest in Bitcoin that we have seen since pretty much October. What was happening in October when we were in an interest on Bitcoin of 16? Well, pretty much from there, we started expanding both in volatility and in an uptrend. Currently, the volatility has reached a very low, which is coinciding with this low interest. And what we are expecting is an impulsive move. We're going to look later in the CPR to see the monthly range for the new month of June. That's going to be very interesting. Liquidity from China is mildly increasing. From US is also increasing, but finding potentially resistance around here in the Fed Reserve. M2 is pretty much all history going up, but it seems to be finding a local bottom here. And people tend to have the expectation that M2 money supply from the US is going to start increasing and potentially the interest rates start to slow down. And on those expectations is where the market tends to rally. But we will have to see. Let's have a look at the general markets. Today we're going to start upside down. I'm going to show you a very interesting insight, the volatility of the S&P 500. This measures what it says. It measures the volatility pretty much every time that it finds a bottom in terms of volatility. The market does another expansion, new volatility coming into the market. This doesn't mean that it's a bullish move. Sometimes it's a dump, sometimes it's a pump, but the volatility is the one that spikes in this chart. And as you can see, since February 2022, when we have big volatility to the downside in the middle of the bear market, those expansions have started to come down. And right now we are at another bottom, and in fact, a lower bottom that we have ever been since 2022. So what are we expecting? What you expect is that this continues to compress the economy until eventually something phenomenal happens in the macroeconomy that just cannot contain the compression anymore. And that could be a massive crash, or it could be a massive pump. You can see that happening over and over again during the history. This period here, for example, from 2015 compresses 2 years until 2017. Then you have another one from 18 compression until we get the COVID expansion, which is the largest that you see here. And then on 2022, in the middle of the bear market, some of the dumps caused this expansion. And right after that, we started having compression. So pretty much what you need to read from this particular situation from the VIX is that assume that there's going to be a jaw-dropping volatility in the next coming months, pointing somewhere in between June, where we are, and I think the maximum to expect that expansion from this resistance is somewhere around December. So anywhere at that point, there should be a big expansion in volatility. The NASDAQ did perfect test of the target of the hive, not like it did in December where it got completely invalidated. But in here, as soon as we got the green candle there was the signal and we target 18.2 and we reach it immediately. Overall, NASDAQ and S&P are starting to look like they lose momentum. You can see here the RSI daily of the S&P is on a channel down now. So in the best case scenario, it should be going sideways. Of course, there's always that 1, 2, 3% chances that this can do a higher high in the momentum and that can make a big high, even an all-time high. But the risk is increasing a lot towards going sideways or finding a pullback, an area of support. The NASDAQ is not very different. Momentum lost, hive signals looking here. Nvidia also took 2 days of downside and that helped the momentum to reset once again at a level of support. But Google and Amazon are in a channel to the downside, trying to find where they can start having another uptrend. At the moment, they're going sideways, but with a momentum to the downside, doing lower lows. All of this is extremely important to know what to expect for Bitcoin. Bitcoin can run against the general markets. Sure, I buy that. But I try not to trade against the odds. If most of the time Bitcoin follows the markets, and this time the general markets are coming down, you can be right. Absolutely, you can start trading Bitcoin and then benefit from a big upside. But you have to admit that you're being contrarian and that you're taking a larger risk compared as if all markets start shining at this point in time. We are still 3 more days above the point of control on the daily. Nothing has changed. We keep doing lower lows. And actually, I have to admit that being in this very depressive move down that is not really taking any lows, is just compressing, it might be something bullish for the short term. The most interesting thing that I'm seeing this weekend is that we were attempting to break above this trend line. We were slightly above it while I was sleeping and then immediately we got rejected. But the price on the 4-hour is once again below the support. So I'm gonna have to move the support to the previous one that broke to see if we are doing any move below that range this time. This candle closes in 1.5 hours and at the moment we are below the trend line, so we will have to come back inside to confirm that we haven't broken down. My forecast on the CPR is not that bad. I drew these 3 lines there and we ended up having them somewhere in between the ones from May and the ones from June. You can see that they're being drawn at 66.5 and the lower pivot is at 64.1. So far we are in a virgin month and the month of May hasn't been that bullish, just a few higher highs but very humbly doing that breakout, but then with no big candles, no real breakout outcomes so far. I will say that there is a chance that the price is gonna come and at the very least test the 66.4 just in order to lose virginity here in the CPR monthly. And I'm going to give you the range for June, spans from 43 to 89. And that is not very different range from the range that we have in May. Right now it's 106%. The range is $46.1 thousand. Let's have a look at the daily. It's looking still very interesting. Last time that we watched this was 2 days ago on the 31st of May and we were testing the support and guess what? We are still testing that stupid support forever. The past week low is at 66.6. Bear in mind that there are plenty of wicks to the downside here trying to grab liquidity. Those are not tradable unless the daily closes below that. They are just trapping more shorts and all these wicks to the upside are trapping more longs. So all the liquidity that you are going to observe here in the order book is just trap traders. The price will want to do whatever is necessary to take that liquidity out from both sides. That's what the market maker desires. Whether he can achieve it or not, we need to think about it. One of the scenarios that I'm still tempted to think that is really weird, that it still hasn't played out, is that we have all this liquidity located at 73K that is very big. And so far, the price seems to be tempting more and more shorts to enter the party. Let's see how many shorts and longs do we have right now. Well, we have a punishing more the shorts. This means that little by little, more shorts are entering the party. And in the live order book, apart from the 73K that seems to be for almost a week there, we have a new level at 70K, trying to short with 678. And support is also coming closer to the price. Before we have support only at 65, that was this area here, and as soon as we started the weekend, people started getting closer and closer to the price. And as you can see, the price doesn't please anybody. It's dead as hell. We closed the weekly candle with another wick to the upside larger than the one to the downside. We are above the highest close on a weekly from the previous bull market, but it seems that we still have plenty of resistance here. Deposits haven't slowed down, which is something slightly concerning. I would have liked to see this becoming a top and see no further deposits, confirming that the fears from empty gogs are just nonsense and people, in fact, want to continue withdrawing and accumulating. But that's not the case. We can see here that the ratio has actually increased from 1.6 to almost 1.8. And long-term holders very humbly have bounced from that area where they were heavily distributing. In order for me to gain full confidence that we are not just in a distribution, I want to see the long-term holders starting to do quite the opposite, to take this high and continue to the upside, just like they did at the bottom of 2021 correction, where you see almost a parabolic accumulation from long-term holders looking forward to take profits at way higher prices. In this case, we see actually the opposite. We see that they are taking precautionary methods, they are disposing, and then when they reaccumulate, they accumulate very humbly. Short-term holders, of course, are doing new highs, they're accumulating and buying. But remember, this orange line, the short-term holders are the victims, and the blue line is the people that know what to do and they time much better their entries. They're not always going to get it right, and sometimes you're going to get disappointed with a poor decision. But overall, if you compare the decisions of the blue against the orange, you are way better doing what this blue line is doing. Liquidity of the last 30 days is very well distributed in this range. The only exception starts being these two spikes that have been there for a long time, that we are talking about 70 and 72. But overall, the cumulative, this red line, you can see that is larger than the green one, meaning that if they made a similar move to the downside than to the upside, they will take more liquidity if they punish the longs. Guys, if you are interested in trading this market, once the volatility comes back in, make sure that you do it in a decent exchange. I really like OKX for all the features that it's offering, and if you use the link in the description, you can take advantage of the price pool that we are currently offering of $60,000. If you don't have access to KYC or you don't want to do KYC, BingX is a great alternative. It's offering 6.2K in rewards. Again, if you use the link in the description. Thanks so much for watching. I'll see you in the next one. Bye bye.